Hi guys, today I'm going to talk about bank reconciliations, which is one of the three important areas where the accounting system interacts with the internal control system to strengthen cash controls. To make a clear and comprehensive explanation of this concept, I'm just going to briefly answer these three questions. Generally speaking, bank reconciliations is a process during which company ensures that the company's accounting records are consistent with the bank accounting records. As we all know, it's general for a company use a bank as a method of control over cash. The bank duplicates the company accounting by keeping its own accounting records of your account. Unfortunately, the bank's accounting records and the company accounting records often disagree because the transactions are not recorded at the same time. Usually, this process happens periodically. Generally, once a month, the bank returns all checks processed during a period, together with a detailed record of the activity of the account, which is known as bank statement. Bank reconciliation serves two processes. First, it serves a control functions by identifying errors and providing an expectations of detailed accounting records that deter theft. That helps companies ensure that there are no errors on statements. Second, it serves a transaction detection function by identifying transactions performed by the bank, so that the business can make a necessary journal entries in the accounting record. This process helping business avoid the exact cash amount they have during the period. To perform a bank reconciliations, following these three steps. Firstly is to compare. We start with comparing the cash balance from the bank statements and the cash balance from company records. Secondly, according to the difference we found in these two balance statements, we need to adjust these two balances and necessarily to produce identical adjusted cash balance. And last, check to the adjusted cash balance, and if there are still any difference, we should find the errors and go through the step again. Now, enough to the theory. Let's see through the quick example and let's show how to deal with each situation for difference. Let's see, the first picture is the bank statements. You can see a lot of numbers on this sheet, and with the details, dates, and transactions, and some notes. And quickly look at the second picture. This is the company cash balance. The most important number we have to pay attention to is the balance in both sheets. And we can see they are different, and we need to perform bank reconciliation. We use four typical sources for difference as an example of adjustments and shown in the table below.